Mr. Bioon, the U.S. stock market collapsed, the U.S. financial defeat. 1. The core of the problem, the dollar's total contraction. Just a few days ago, after finishing the article, the United States is not far from a beggarly nation, the American stock market began to plummet, and the United States took the first step on the road to a beggarly nation. This article has been criticized by many people who say that the United States is the most powerful country in the world. They are confused because they do not understand the nature of the current global economic problems. The current world monetary system is based on the dollar. The expansion of the global economy is only the result of the expansion of the dollar credit. As long as the dollar's supply of money is no longer expanding and deflating, the bubble in asset prices is bound to be bursted. The financial crisis is bound to roll back. This is very simple. So grasp the problem, the core, can get accurate and valuable forward-looking judgment. The US stock market crash, which some people later explained, is the result of algorithmic trading, and then there's the personnel explanation, it's a technical adjustment. These explanations are very naive because they do not capture the key and essence of the problem. Economic analysis, far from being a productive study, would have been impossible if the hindsight explanation was incorrect. Then that should not be your profession. Why can't the dollar continue its credit expansion? The previous article in the School of Learning has thoroughly analyzed this problem. Here's a quick one. Credit expansion, in layman's terms, is the expansion of credit, and, more generally, borrowing more money. Why can't I borrow more money now? Because the borrowed money won't come back. It is very easy to understand this problem when it comes to common sense in our lives. If the lender lends money to the borrower will not return it. Will the lender continue to lend him the money? Obviously not. Not only will lenders stop adding new credit, but lenders will also have recourse to previous debts. Why didn't the money come back? Because companies get loans, they invest. Otherwise it's simply borrowing money, not producing it, because the interest is there, and it's going to be a net loss. And the enterprise should guarantee to be able to repay loan principal and interest, not only cannot lose money, still have to assure net profit margin is bigger than borrowing rate. If the market becomes saturated, the production will not be sold, and the inventory will be formed. In order to clear the market, we have to reduce the price. And the sale price can cause the asset price to fall. If the asset price falls below the cost, there will be a possible situation where the money the company borrows from the bank will not be repaid. Since the 2008 outbreak of the financial crisis, until now, after 10 years, it has always been dealing with this matter: borrow the new and the old, QE, robbing Peter to pay Paul, plus lever to inventory, asset prices, to restore the balance sheet, to avoid a systemic crisis occurs, to mitigate systemic risk of financial system. The theory is that if you borrow money, you can make more money, not only to repay the new debt, but also to repay the old debt. The harsh truth is that the premise is simply not true. Why is that? Because since consumption is strong enough to make more money with the new money, why is it that the borrowed money will lack investment opportunities and the old debt will not be repaid? Now that we have seen the phenomenon of borrowing old debt, it shows that consumption is not enough. In the case of insufficient consumption, and the illusion of borrowing new debt to make more money, is not the brain dead? Thus, the premise of this operation is not valid. This is an even more paradoxical claim. There is no point in adding more economic risk. In the US dollar-dominated global financial system, money is created only when people borrow money. Once all debts are paid off, the credit will disappear and the currency will be nulled. When all debts are breached, the effect is the same: the credit will disappear and the currency will be nulled. In both cases, the credit crunch will cause severe deflation and a Great Depression. What we are facing now is the latter. What happens to this situation? The cure for the Fed is quantitative easing. In an already saturated market, continuing credit expansion will inevitably result in people borrowing more than they can afford. It's no use cutting interest rates to zero. Because the money is put out, the borrower will need to consume. It will inevitably result in the loss of business nature. Even at zero interest rates, unless the whole society shuts down, there will be no money left, which is bad debts, and more bad debts. In the case of zero interest rates, new credit from quantitative easing in the United States has not entered the real economy in order to reduce the consumption of money in the process. No investment in the real economy, no real job creation, can reduce the loss of money. In the United States, the so-called non-farm payrolls data, the employment rate is increasing, all is made up by the government. Business conditions are improving, and they are also made up. It is the enterprise itself, add leverage to buy their own stock to earn a little money, whitewash. The bigger the leverage, the bigger the liabilities. The truth is, American stocks, many of them are net debt. Such a group of loss of profitability, will only sit on the stock market to cheat the garbage companies, can push the US stock up to 26K, too funny. New credit, in the absence of investment opportunities, no matter what the production is not good to sell, do not dare to hire more people, any increase in the cost of the expense will lose the principal. What should the borrower do if he gets the money? So let's analyze that. 2 China's housing and American stocks, 2 super bubbles. Borrow money, dare not invest the real economy, dare not hire more staff. What do you do with the money? I think a lot of people would think that I would use it to buy a house. Clever, the money is really used to buy houses and stocks. China's real estate market, and the US stock market, formed an asset bubble, is this credit expansion deformed product. The Federal Reserve's quantitative easing of money, through gray channels, has pushed China's property prices higher. At the same time, the domestic financial traders, through fiscal stimulus, further pushed up China's real estate prices. Why do domestic financial traders have to assist? Because of pure asset bubbles, only through rising asset prices that have been divorced from supply and demand, can they make a profit by buying low and selling high. After 2008, China's real estate market has been completely divorced from the supply and demand mechanism, but has become a financial product. By using China's fiscal stimulus to help Americans stir up house prices in China, they will have a higher return on investment. Anyone who can't afford to buy a house is a trader. The lack of investment opportunities in the real economy has turned investment into pure financial investment. In the United States, they put the killing fields in US stocks. Borrowed money, want to realize the appreciation of the currency, can repay the bank loan on time, only one method, continuously raise the stock price, continuously carry on low buy high sell the operation. Borrowed money, invest in everything. You can only profit by financial speculation. For financial speculation to become a stable and sustainable positive return transaction, it is necessary to ensure that the subject matter can only go up and not fall, otherwise the new loans will form bad debts. This is China's housing price can only rise cannot fall, the United States stock can only rise cannot fall the deep root cause. In the economic cycle, when companies borrow money, they expand investment production and hire more people. So let's say I borrow $1 million, I'm going to make $1 million, I'm going to have a net profit of 1.2 million, and I'm going to pay 10%, and I'm going to use the money that I've made to repay the bank. I still have 100,000 left. That's normal economic growth. And then it becomes this. So at 5% interest, we borrowed 1 million from the bank, we bought a house, and the next year the house went up, and it went up to 1.5 million. He sold his flat, repaid the bank's $1.05 million, and earned $450,000. On the other side of the American stock market, you can borrow $1 million from a bank, interest rate 0, and buy $1 million assets. In the second year, US stocks rose by 50%, after closing the warehouse, the equity became 1.5 million, and the bank repaid 1 million yuan, and made $500,000. If you keep doing this, the prices in Beijing and Shanghai will go up to 100 in a few years, and the Dow Jones Index in the United States will surpass 100,000 in a few years. However, this operation must be unsustainable and unsustainable. In order to address the risks of the financial system, the result is that after the credit has been leveraged, the risks of the financial system have been piled up, like a firefight. Trillions of dollars of imported credit bubbles, speculative Chinese real estate, the Chinese people's money has been wiped out. If they want to liquefy the deal, they will carry the money of the Chinese people to the United States. The unwinding sparked a financial war between China and the US. Through China and the US financial war, the United States failed miserably. The financial war waged by the Americans, in the context of domestic financial traders, was a victory for some of the battles. The US Federal Reserve raised interest rate expectations, and the fifth column in the country flooded out. China's reserves have been rapidly reduced by $1 trillion. This is clearly an American operation. 15 years later, who was the traitor to the financial traders? Those who advocated a counter-cyclical easing to assist the Americans in firing up Chinese asset prices, in the name of internationalization of the renminbi. It is the secret of a hidden evil that advocates opening up the financial wall to open capital accounts. They were all traitors to the enemy. The traitors, and the traitors in 2008, were part of a group that served American interests. The reason we were attacked by Americans twice in 2008 and 15 years was because of the treason of the traitors. The net outflow from China flowed to the US. This led to the dollar foreign exchange market, the US stock market, and a great bull market. If Americans were allowed to unwind, the wealth accumulated over the past few decades would evaporate overnight. At this time, the key to the Sino-US financial war is to stop the American liquidation in Chinese housing market. That is, the houses should not be liquidated, using administrative means, forcibly freezing the real estate market, no more open positions. At the same time, the foreign exchange controls, even if liquidated, before the time to escape, prohibit cross-border flows. I hope that when we look back on this period of history, we must distinguish between right and wrong, and find out who is the evil that has collaborated with US, and who has saved us in our country. Although at the campaign level of financial war, the United States had a few hands, and from the overall war level, as long as China did financial control, the United States would inevitably fail in this financial war. As the weasel stole the chicken, although he caught some chickens, but the door of the cage was closed, not only the stolen chickens could not be taken out, but the weasel himself could not escape. Then China began to fight back. Financial corruption, the recovery of foreign funds, the reduction of US treasuries, this is quite the triple unwinding operations of the US dollar, US treasuries, and US stocks. In this financial war, the United States hopes to defeat China in one fell swoop and wipe out all the wealth that China has accumulated over the past few decades to repair America's balance sheet. A run on the beggar thy neighbor stock is the only option that can ease the debt crisis. And stock run failed, and has carried on the reverse positions by China. China to the US capital channel is closed, the lack of follow-up funds continue to push up US stocks of asset prices will inevitably collapse. What is more frightening than the self-collapse of the US stock market is that the United States itself, as well as the US financial market speculation, although made money, but cannot run away, it is paper wealth. So, the United States has had a decade of housing and stock market boom, and will be harvesting. The US strategy is to prioritize China's real estate market, and to cheat money to survive. And once China's property market is frozen, unable to liquidate positions, there is no escape. As a last resort, they can only open positions on US stocks. Why do we have to unwind this year? Because of the 2008 financial crisis, the Federal Reserve's quantitative easing, new credit expansion, many of these are 10-year bonds. For this is a more serious crisis than it was in 2008. After the first plunge in US stocks, many felt it was a technical adjustment. The market will repair itself. They are lack of a basic understanding of the nature of the crisis. The unwinding of the US stock market will be much more than you can imagine. This is a more serious financial crisis than it was in 2008. In the Sino-American financial war, the United States failed miserably and chose to open its own stock market. These knock-on effects, superimposed on everything, will leave the United States on the road to a beggarly nation. Interest rates on US debt will rise, US stocks will fall, and the dollar's decline will severely impact the US financial system. Financial speculation, high asset bubbles, return on investment. Once the asset bubble is punctured, there will be a lot of bad debts. In a climate of rising risk, everyone is selling, and the money is sure to get more expensive and interest rates rise, which will exacerbate the financial crisis in the United States. In an economy built on debt, when interest rates rise, everyone pays more. So the amount of money that you spend is going to be less and less. Not only is there less money to spend, but more terrible things, and more expensive things to buy. Why? Because the dollar has depreciated so much that imports are more expensive. This type of imported inflation will make it hard for many Americans to sustain their basic lives. The plunge in US stocks was just the beginning. Then exchange rates, interest rates, and inflation will turn America into a battered financial rust belt like three knives. Worse, as the risk of the US debt market was triggered, sovereign funds holding US debt sold off on a massive scale, and Americans couldn't borrow anymore. So they've got Bitcoin, which is the financial opium that is being used to cheat money, and as countries regulate Bitcoin, the financial anti-drug movement, the price of Bitcoin goes down to zero. Once the financial opium trade was banned, America's other war in the financial war would also fail. After that, Americans can't even cheat for money. The choice for the Americans remains the path of war risk. If you can't get money, you can steal money. In the United States, is an aging paper tiger. An aging paper tiger will not be able to steal money, but may also lose old bone. The financial defeat is the large-scale liquidation of the national fortune of the United States. Since then, the United States, once the hegemonic power, will gradually withdraw from the stage of history. From now on, America can neither make money nor borrow money, nor can it grab money. In such a desperate situation, there seemed to be no other way to live, except beggarly. What specific impact does this crisis have on us? What should we do about it? The best response is to deleverage systematically, and any highly leveraged sector will struggle to survive the financial crisis. At the same time, sell all dollar assets and sell all US assets. Embrace cash, embrace the UN and embrace China. This is the best choice to follow the historical process.